More than 40 million Americans are about to find themselves in dire financial circumstances or get economically wrecked altogether, and the rest of Americans will feel the impacts indirectly in one way or another. Collectively, Americans owe $1.8 trillion in student loan debts, and by October, when repayments are kicking in, the average payment will be anywhere between $350 to $400 per month, depending on the source of the calculation. Now, while the repayment pause was in effect, the average borrower saved $15,000, which allowed many to purchase homes, purchase vehicles, renovate houses they already were in, or pay down debts, all of which allowed them to contribute to the economy in a variety of ways. Presently, of course, the Supreme Court is diddling around whether Americans are deserving of a $10,000 or $20,000 loan forgiveness, which for many will merely be a water drop on a hot rock and evaporate as soon as the interest rates erase the forgiveness within just short order. Here's where it gets dicey, though, because we're heading towards multiple cliffs. The first one is the cliff of social imbalance, the rugged individualism, and the American condition. On the one hand, many who paid their loans off already are steadfastly against forgiving some or all of the $1.8 trillion that burdened the other Americans. And on the other hand, most seem to be content with the $4.2 trillion of COVID relief aid, which assisted many of the largest organizations to execute billions in stock buybacks. So apparently, as far as the American condition is concerned, it's okay when it's about capitalism, but frowned upon when it's about social responsibility. And meanwhile, the demographic infighting between the lower and middle class really only benefits the wealthy, but I digress. The other cliff will be the impact of reinstating loan payments. Not only will millennials, for instance, be impacted by 6.5% of their spendable income going away, but collectively the U.S. economy will lose $18 billion in consumer spending per month. So how is this going to play out? Student loan payback will either wreck the financial health of Americans by not paying their loans back at all, or wreck the economy by money being sent to banks and resulting, of course, in greater dividends for its shareholders, benefiting the few rather than all. Home foreclosure rates will increase because people won't be able to pay their mortgages as they're calculated. Bank repossessions of vehicles in a country that's already plagued with dismal public transportation and infrastructure will, of course, rise. And due to the negative credit rating impacts, future borrowing will be prohibitively expensive or impossible for many. And that's really only the tip of the iceberg. So to those who are vehemently against student loan forgiveness, ask yourself how the loss of consumer spending, the $18 billion per month, will impact your organization, the revenue of the organization, and subsequently your paycheck. For the rest, going on a repayment strike will likely have to be an option. But honestly, ultimately, I wonder, how will reinstating student loan repayments impact your life?